Cantor Fitzgerald raised its Coinbase price target to $250 before Q1 earnings, keeping the focus on management's forward-looking comments. The tension is that investors may discount backward-looking crypto winner numbers and instead judge Coinbase by regulation, products, and demand signals. Old investment firm now points to Coinbase Coin as the center of the story, not a broad market mood. The first thing to separate is the event from the interpretation. The event is Cantor lifted the target to $250, and the pressure point is that the prior target was $221. That gives the segment a concrete test instead of a broad mood read. A viewer can immediately judge what changed, which actor matters, and what signal would confirm follow-through. The firm raised the target from $221 to $250 and maintained an overweight rating, while Coinbase was scheduled to report Q1 results on May 7. This is the baseline viewers need before treating the move as bullish, bearish, or settled. The number to keep visible is $250 target. It anchors the scale and prevents the scene from drifting into vague sentiment. Q1 earnings are due May 7 is the confirmed frame, while the rating stayed overweight sets the practical boundary. If later claims appear, they should be compared back to this frame rather than accepted because the story sounds urgent. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is expectation reset. Earnings can show past activity, but guidance around demand, regulation, prediction markets, and AI agents may drive the stock. In plain English, the mechanism explains why the headline matters. For Coinbase Coin, it is not a side detail. It is the reason the event can affect users, markets, or institutions. Guidance may matter more than history is the working part, and prediction markets draw scrutiny explains why the outcome is not automatic. A headline can move attention, but this mechanism decides whether the event has repeatable consequences or only a short reaction. The affected side includes coin holders, crypto exchange investors, prediction market users, and analysts tracking Coinbase's regulated product expansion. This is where the practical consequence sits. The story is narrower than the whole crypto market. It focuses on Cantor Fitzgerald, Coinbase Coin, and the counterparties tied to the same path. Coin holders face product questions is the exposed side, while investors watch regulated expansion. That prevents overreach. The segment does not claim every token, chain, user, or institution is equally exposed. What remains unclear is whether new product lines can offset weaker trading activity and scrutiny around event contracts. That distinction matters because traders and users can overread a first move. A useful viewer should not fill that gap with a prediction. Trading weakness may still weigh is where evidence stops, and new products must prove demand defines the proof that would make the next claim safer. That keeps the uncertainty useful. It tells viewers exactly which assumption should not be treated as fact. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is Coinbase's May 7 earnings call, especially commentary on demand, regulation, prediction markets, and the AI payment agent app store. For old investment firm, the closing read should stay tied to the next observable signal, not a prediction. If that signal appears, the story gains confirmation. If it fails, the market has to treat the earlier move as incomplete. The practical close is earnings tone sets the next move. That keeps the ending tied to a measurable signal instead of implying a guaranteed outcome. It is the readout the viewer can carry forward after the card ends and the next market or policy reaction begins.